Hello and welcome. I'm Mark Painter with EverGuide Financial. In today's tutorial, we will be focusing on the income statement. So one of the places that people ask is, where can I find information pretty easily? So as you can see here, if you go to simfin.com, here's a place where you can find financials for companies rather easily. So we're going to go to the top here. Once you're in here, you can actually go in and search for a company. So we're going to go ahead and search for Apple. So once you go into here, it takes a couple seconds to load up. But once it does, it gives you a bunch of information for this particular stock. And what's nice is it gives you a lot of key figures here, some business summaries, some financial ratios. We're going to come down and we're actually going to focus right now on the income statement, or as they say here, the profit and loss statement. So here's just the what they do is they put it into a version that is that looks the same across all different companies. And what's nice is what you can do here is come up here and you can actually go in and put percent change as well. Now this is important because as you look through the statement, the first line, as we go through this, the first line is revenue. So when you look at percent change, you can actually go back through every year. So this is 2011, 2012, all the way through to 2020. So when you look at the percent change, you can see how much revenue has grown over each year. So 44%, 9%, 7, 28, -7, to this year's 5.5%. Now that's important to look at because you want to make sure that your company is growing. That's one of the things when you're buying a stock, you want that company to grow, especially when you're looking at a growth company. But this is important because you put this percent change in here and it lets you go through all of the different line items and look at how that works. So, here's just a simple cost of revenue. What does it cost to produce your goods? And then you have your gross profit, and you can see, even though revenue changed by 44%, profit changed by 56%. Now, this number for profit versus revenue, that'll change a little bit, but it's good to look. Obviously revenue is one thing, but you want to make sure that you're actually making money. It also breaks out operating expenses and goes down through here. Now, what we're going to do is, so this is the standardized. If you come over here to this side, you can get the standardized version. Also, if you click this, and it'll take a second to load up, it actually gives you the original data. And if you notice here, you'll get a lot more detailed information once you get this original data. And, one thing that's important, especially for a company like Apple, is it breaks out. So for 11, 12, 13, 14, 15, 16, it just showed their net sales. And then in 2017, they started to break out their products, which is mostly the iPhone, and then also their services. So you can see that it's broken out, and then actually it shows the growth rate. So what's important, and again, and this is why it's important to look at an income statement, is the numbers need to match the story. And so just real briefly on the story is back in 2017, they started breaking out because Apple wanted to focus less on the iPhone sales and more on the services they provide, both through all their different services, whether it's Apple TV, whether it's Apple Health, whether it's Apple iTunes, all of the different services that they provide. And what's interesting here is, again, we have that percent change number. You can see the product sales, 15%, -5%, 3%. So the growth rate is really dropping in product revenue, and services 21%, 16%, 16%, much higher growth. So that's why a company like that will break it out. Now, before we get into anything else on this, one of the other important things about SimFin is that it actually allows you to download the data. So if you come over here, you can click here and download, and it will download something. I've already done it to save us a little bit of time, and what it does is it'll produce something in an Excel spreadsheet. So here's the general one where they produce just the general information from an income statement. I put it here just because this is how it's produced. This is how it comes out. What you can do, and what I think is important, is now here's another tab. It's the same data, but what I did was go in and do what's called a common size income statement. And what that means is you're looking at everything relative to revenue. So you can see here, this is 100%. So you're just taking the revenue number and dividing it by the revenue number to see, what percentage it is. And because there's a lot of numbers, and again, I'll go back to this, if you're just looking at this, there's a lot of numbers and you can't really distinguish too much. So what a common size does is, on the website, we looked at growth rates, and here we look at common size to see, kind of what's going on in the particular business. So cost of revenue. So cost of revenue is really the direct cost relating to manufacturing or producing the goods. So this will include material costs, labor costs, things of that nature. And so it's interesting to look and see, well, how has that cost of revenue changed over time? And you can see as we go through here, it's been relatively stable between 59 and 62%. And so that's something that you can expect. One of the things you can do is then when we get into valuation, as long as you can predict into the future, that you can actually model out some type of number based on what you're seeing here as a function of revenue. So next here is, so if you just take revenue minus the cost of revenue, you get what's called a gross profit margin. So here's the gross profit margin. So you're just taking gross profit and dividing it by revenue. And you can see again here, here's what it started at 40% and stayed there, and it's been actually down and staying relatively close to around 30%, especially over the last several years. So that is their profit margin. Next here you have operating expense. And operating expense, the difference between that and cost of revenue, operating expense is going to include things such as marketing, sales, rent, inventory, research and development, administration and general expenses. And so these are other parts that are used to operate your business. And so if you go through here, that operating expense back in 2011 was around 9%. And you can see that it's actually trended, while these numbers have been relatively stable, both in cost of revenue and profit margin, if you walk through the operating expense, you can actually see that that's trended up from 9% to 14% through 2020. And again, when you're looking at an income statement, it doesn't necessarily tell you anything, but now this, again, as you walk through the numbers, it allows you to say, okay, what does this mean? Why are, and then you can go back and look into the company and the discussion, the website, presentations. You can say, why are the operating expenses going up? What has changed in Apple, and why are the operating expenses going up? And what's interesting is, so now here you have your operating income. So this is what's been made. And then you have your operating income margin. And as you can see, this was 31%. You had a couple of you had a big year in 2012, and then that has trended down from 31% to 24%. So again, it just goes to something. There's going to be lots of stories. There's going to be a lot of things that are out there. But if you can look through, this will give you a picture of what's going on. So something between 2011 and 2020 has changed where, even though revenue has grown, the margins have decreased. This non-operating income, these are just one-off expenses. So a lot of times they're going to be much smaller than what these figures are. And most people tend to ignore them unless there's something that's really outstanding. So as you look through here, this is very, very small percentage of revenue. Obviously, something happened, 1.2%, something happened in 2017. So you may want to go back and look and say, okay, why did they make so much money in 2017? Why was there a one-off addition to income. Sometimes you see it as a positive, sometimes you see it as a negative, but in general, that shouldn't affect too much of the stock price. And then down here, so once you subtract that, you get pre-tax income, and then you get income tax, which is here. So here's your income tax rate overall, which, again, as you walk through this, it's about 8%. Between 7 and 8% for several years. And then in 2007, still around 7%. And then 2018, 19, and 20, that's dropped rather significantly, where it, from 7% down to 3%. And you say, wow, okay, that's interesting, but one thing that we all know is in 2018, they passed the new tax law, which lowered corporate income taxes pretty significantly. And so that's an important figure to look at, because if there is a change in tax law, then this number may go back up. And so they may have to start paying taxes. Now, what's interesting is, again, when you go to the bottom, and this is why it's important to look at an income statement with what they call common size, is so now here's your net income, which is after all expenses, how much money the company has made. And here you go, here's your net income margin. So what percentage of profit, what percentage of net income are you making on the amount of revenue that you make? And you can see that, 24%, 27% back in 2011, 2012, and then it's stabilized between 2013 and 2020, right around 21%. It's very, very consistent at 21%. So you can probably expect that going forward. What's interesting is that these margins, even though the tax rate has dropped over the last 3 years, these margins also dropped over the last 3 years. So you would think that if they're paying less taxes, their margins should go higher. So it just, again, the point of walking through this is to look at these numbers and put them in a way where you can relate them to the stories that are out there. What's the narrative around Apple? And again, it's pretty important, because sometimes the numbers won't match the narrative. And again, for Apple in particular, it's interesting because as we go, we're going to do the same thing. This is just the general income statement. We're going to do the same thing on the more detailed version of the income statement. Because again, in 2017, they started breaking out the product services versus the service, the product business versus the service business, as we walked through on the website. What's important is Apple, during that time period, the story and the narrative around why people want to own Apple is because they're becoming more of a service company than a product company. And why is that important? One, because revenues are more stable, because people pay on a subscription basis. And two, margins should be higher when you're doing services. So one way to check that is to come in here. So same type of thing, we're just breaking out products and services. And what's interesting is yes, you can see the product margins are dropping. The the service margins are actually going up. So 66% versus 31%. So, okay, yes, the narrative makes sense. Additionally, as you look at, the mix between products versus services, in 2017, it was 86% versus 14%. And the product has been trailing, so went from 86% to 80%. And services went from 14% to 19%. So, okay, guess what? The narrative makes sense. So you know what you can look for going forward. What's interesting, however, is once you look at this, now that this is broken out, okay, yes, this makes sense. Okay, they're switching from products to services. But before they broke it out between 2011 and 2016, when you just look at the gross margin, you were at 40% back in 2011. You had 2012 was obviously a very, very good year for Apple all around. But it went 47, 38, 38, 40, 39, 38, 38, 38, 38. So the gross margin has been pretty consistent around 38, and it's actually lower once they're breaking it out. What's interesting is even though the mix is getting towards higher margins and be going, and up here you can see the margins are higher for services versus product. The overall margin is actually lower than where it was before they used to break it out. So that's something that's interesting that you may want to take a look and dig a little bit deeper. What's going on? In some cases, even though the mix is changing, maybe the cost of building the iPhones is just getting very, very expensive. So, even though they're switching from products to services, the costs to produce those iPhones are getting very, very high, and they're not able to pass on the cost of the iPhone to the consumer. So it's something to think about. And again, it matches with the narrative. Additionally, as we go down here, we're just going to talk about a couple more things, but this actually breaks out some of the different parts of the operating expense. So here you have research and development, you have selling, general, and administrative expenses, and this is your total operating expense. What's interesting about research and development, and this is very, very important, because research and development is you want a company that's growing to spend money on research and development, because this is something, when you're spending on research and development, that's usually used for future growth, especially in a technology company. Technology companies need to be at the top of their game. And if they're not spending money on research and development, then some up-and-coming newcomer is going to do it, and they could take over what a incumbent already has. And so what's interesting here is if you look at this, the research and development expense has gone up precipitously every single year, from 24% in 2011 to almost 48% in 2020. So again, that's something that's interesting. So if you want to go back and look at the company, the website, the investor presentations, you can look and say, well, what are they spending this money on, and how is that going to lead to future growth? So that's where, again, the income statement leads you to finding out more information. And you can see selling, general, and administrative expenses went from 75% down to 51% over the last several years. So less money on the general information and more towards research and development. So that can be a good thing. And then lastly, we already went through these numbers, which was the operating margin. That's just going to be the same, and all the way down to here, which the net income margin is going to be the same as on the previous page. So that is a quick rundown of how to read an income statement, where to find that information, how to look at growth rates, and then also what's importantly is by downloading it and putting it into Excel, you're able to look at the data, you put it in the common size, and walk through it and say, okay, well, how does the number match with the narrative? And what does that mean for this particular company going forward? So I hope you enjoyed today's income statement.